You're not afraid of the dollar collapsing, you're afraid of what happens to you if it does. Because when you hear the dollar is dying, your brain doesn't process it as economics, it processes it as survival. And that changes everything. Because your brain has one job: keep you alive, not make you rich. And the moment money feels threatened, your brain treats it like oxygen is running out. This is why death of the dollar stories spread so fast. Not because they're always true, but because they feel true. And your brain is wired to trust feelings over data when survival is involved. This is called loss aversion. Losing something feels about twice as painful as gaining the same thing feels good. So when someone says the dollar might collapse, your brain doesn't hear maybe. It hears prepare now. And once that switch flips, logic takes a back seat. Because in evolutionary terms, overreacting was safer than being right. If you ignored danger, you died. If you overreacted, you survived. So your brain learned something very simple: better safe than sorry. Now bring that into modern finance. You're not running from predators anymore, you're running from headlines. And headlines are designed to trigger you. Because fear keeps you watching. Fear keeps you clicking. And the more you consume it, the more real it feels. Until one day, you're not analyzing the market anymore, you're reacting to it. And that is where the real danger begins. The real damage doesn't come from the story, it comes from what people do because of the story. Because once fear spreads, it doesn't stay individual, it becomes collective. This is herd behavior. And your brain loves the herd, especially in uncertain environments. Because if everyone is running, there must be danger. But here's the paradox. In markets, the crowd is often wrong at the extremes. Not because people are stupid, but because they're human. And humans under fear don't optimize, they escape. So when the dollar is dying, narratives peak, people don't ask better questions, they make faster decisions. And speed feels like control. But in reality, it's often just panic wearing a mask. Now here's where it gets dangerous. Because the market doesn't just react to fundamentals, it reacts to people reacting. Fear creates selling. Selling creates price drops. Price drops create more fear. And suddenly, the story starts creating reality. Not because it was inevitable, but because enough people believed it was. This is how bubbles form, and this is how they burst. So the question isn't, is the dollar going to die? The real question is, what is this story making you do? Because smart investors don't just study markets, they study themselves. They recognize the feeling without obeying it. They understand this simple truth: the biggest risk in markets is not volatility. It's reacting emotionally to volatility. Because once you understand this, fear loses its power over you. And when fear loses power, you gain something rare: clarity in chaos. And that is where real wealth begins. Because in the end, the market doesn't reward the fastest. It rewards the most disciplined mind.